Ladies and gentlemen, first of all, I'm sorry for a small delay and welcome to CEO Investors Summit as a part of WBAF 2019 World Congress. I think this part of the Congress will be quite interesting. The most important part of any investment is return, and angel investing is not different at all. I think that the goal of this session is supposed to be how to identify and to emphasize the importance of the global networking of CEOs and other executives in order to facilitate investments in aspiring startups and aspiring entrepreneurs and, of course, make a return and make a beneficial exits. I think that one of the persons that is probably one of the best people that can talk about this issue is Paul Doany. He's a CEO of Turk Telecom, and also he's the president of the CEO Investors Committee within WBAF. And having in mind that he's also an investor, an angel investor, and that he invested so far in more than 20 startups, I think that he's the key speaker and key person to share his own experience and to tell to each of us what he thinks about this opportunity for networking. Paul, the floor is yours.
Thank you very much. I'm sorry, we started a bit late, but we will finish on time. So the session will start at 3 o'clock, which is will be a discussion panel on this subject of, let's not call it CEO or angel CEOs, let's call it executives who are interested in making personal investments in what we call early stage angel and any form of investment in a startup mode. I think that when I met actually Baybars and I saw this direction of trying to bring multi-country persons to promote angel investments in the countries that they're in fact creates an interesting platform for startups to expand wherever they are based into perhaps other territory would be the minimum you could think of, because perhaps having cross-border investments, meaning somebody from country X coming here and finding something amazing in country Y and then making an investment, may not in itself be a high probability. But what could be more probable is seeing something that worked in one country and helping that particular, let me say, business model be replicated in their own country, having access to what the other company has done. Could be an easier model, for example, that can work with these type of gatherings. And that would therefore require some seed capital, but perhaps in a sister company or a business partner company or whatever works in the end is what's important. In relation to executives, we also highlighted the idea that executives can invest while they're working, so they don't need to give much of their time. It can be complicated if it conflicts with the business that they're in. In this company that I'm working for now, in Turkish Telecom, we already actually have an accelerator program in the company, and we have a corporate venture capital arm of the company that invests in early stage, primarily scale-up type capital growth stage, growth capital for companies. And the accelerator is a form of support that the company does through a selection criterion for domestic market, and the company doesn't take any interest in it, any equity interest, but has a right to match at the valuation of the entering party. So this has allowed also the company to provide support into the local economy, and out of this have come a lot of interesting successful companies. In the corporate venture capital, we've only invested so far in 2 companies, and they happen to be in the health and education sectors. So what is interesting, in fact, about promoting investments by executives of companies, at least in this particular market, is that they can register as an angel investor in this country. And if they do, a part of their taxable income. So let's say you are earning per year a certain net amount of X. So you get net per year X. That's your salary, net of tax. Your employer pays the employment contribution of your tax. A part of that money can be invested. This is a system that is available in Turkey, which in fact is designed to encourage private money while you're working to go into supporting companies. There's a mechanism that if this thing works, you pay back a part of that, but in the end, that's money that you're not getting anyway. This is a way that the government is doing to incentivize through tax investments in early stage startups and frankly, young companies. Also, what happens in this country is that they promote technopark companies or companies who are doing R&D, that their IT personnel who are working in the information technology area do not pay any income tax. What that means is that the cost to the company of engaging their employees has an element of saving. These are, let's call them incentives, which Turkey has very successfully introduced. And there are also some income tax, or let's call it capital gain tax, for example, when you get to an exit stage. So when you are exiting an investment, there are also incentives. If you hold that investment for longer than 2 years, you are practically paying no tax. That's the incentive. Invest, take a risk, use a part of your money which you're not actually getting. Your employer is actually paying for it. The government gives it up. If it works, you also have an incentive if you hold it longer than 2 years. If you sell it earlier, then of course you pay tax on that. So these are incentives. And again, this is a very large market. What I've observed in Turkey, I've been here now since 2005, end of 2005, is that by that time, frankly, very few people were investing. I'm talking about employees, stock options we had in the company. For example, at that time when we launched in 2008, was the first listing of the company, very few people were interested in buying stock. So we were basically providing them, we were buying the stock in their name as part of their bonus, cash bonus, for example. And seeing, what happened in the last 10 years is that a lot of more people are investing because of these incentives. So I think Turkey is an interesting model for people to look at. And in the upcoming panel now, we will be also hearing from other people who have been supporting angel investments. My particular background is that I made my own startup, let's say around 30 years ago, and then I ended up being re-employed again. So I had to give it all up and start again as an employee, which was part of what I had to do. And now I'm back into that role again, and I still have these 20-odd investments in this particular market. 2 of the companies have been very successful. They have gone international. One of them is actually international, operating from out of Turkey. My executive team, all of them co-invested with me. My CFO was the first one to co-invest, and then came some of our subsidiary CEOs. The last one I mentioned in the gathering yesterday was a CEO of our broadband company who wished to even get a pre-exit exit, and the company decided to buy back his stock at a good multiple. So I've seen actually this happen in action, from people who didn't really want to do it into having the guts to do it. So it is doable, but of course it is risky, and that's why diversification is important. And in these type of early stage companies, $10,000 can go a long way. So it's not a lot of money. The CEO that I mentioned to you that is now exiting that particular investment, he invested 42,000 euro, and he will be getting now a pre-exit price from the company buyback at a good multiple, over 4 times, for example. That's just an example which just happened this week. So we don't want to, of course, overpromise success, because we know these are risky. And I think at this point, I would like to invite the panel to come over, and then we can start our session. I think we're running a bit late. Thank you very much.